We are here on this amazing day. Okay everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's pick up for business. Okay guys, we are marking up AUD USD. Let's take a look up in the market to see what's going on. So back in May of 93, the market started off. We have an area of resistance. We have an area of support. I see a formation. There we go. There's the first leg, second leg, third leg, fourth leg with the retest included there. And then from there, the market pushed right up to new areas of high highs. Once the market got pushed up, it retested the area of resistance once, and then we got another push up to the top. From there, price returned back to the area of the support. It created enough momentum to push up top. I'm going to demonstrate what I see. This is the first leg, second leg, third leg, the fourth leg. Here comes a retest, and we know after the retest we get a push up to the top. It wasn't a big push, it was a slight push. There we go right here. So the market reached new areas of higher highs here, and when we was on the way up, we seen a double bottom with the formation, and from right here there's a double top. I'm going to demonstrate what I see. I kind of marked it up already, but I'm going to remark it up. So from there, the market, when the market came to previous areas of higher highs, it did a double top. Here we go. First leg, second leg, third leg, fourth leg. That's the double top. Here comes a retest that happened here, and the market wasn't able to reach back up to previous areas of high highs. It lost momentum because it wasn't able to reach. So the market dropped back down into previous areas of support. Okay, so from there the market dropped back down to previous area of support. So we had a push down one, it came back up to retest previous areas resistance here. Another push down two, the market came back up to retest previous area resistance again, and we got that final push down for the third time. Okay, so from there the market went into new areas of lower lows. Okay, so I see a pattern. I'm going to demonstrate what I see. We have an area of so when the market dropped for that last time, we got an area of support right here. There's a pattern that happened. I'm going to do the formation. First leg, second leg, third leg, fourth leg, which is a double bottom. After the fourth leg of double bottom, we look for a retest. It happened right here. It retested. The market was able to create more momentum to do a full push up. And here we go. One push up, came back to retest previous areas of support right here. It's a second push up. And it's a third push up. Okay, so price is trying to return back to previous areas of high highs right here. So I see something here. I'm going to demonstrate what I see. There's another formation. Okay, here we go. So once the market went back into previous areas of higher highs or close to it, the market did another formation. I'm going to demonstrate what I see. I see a double bottom, and here we go. So this is the first leg. Uh-oh, that's not it. So this is the first leg. This is the second leg. This is the third leg, and it's the fourth leg. And either the retest happened here, because it did slight retest here. We see a bunch of dojis, so let's say the market did break up after that fourth leg and it did a full push, and here go to retest here, retest the previous areas of support, and then we got a full push up to the top to new areas of higher highs. So I think the market probably reached back up to previous areas of higher highs. Oh nope, it broke above So this is new areas our highs is in. So let's see what's going on. So from here, so we did see that double bottom, which became a push up to the top. Then it reversed. I see a double top, first leg, second leg, third leg, and then that fourth leg did to the full drop back to the bottom. So it broke previous areas of support. 1 level, 2 levels, 3 levels. It went into, and then something happened here as a pattern. Double bottom, first leg, second leg, third leg, fourth leg. I don't see a retest, but a retest was supposed to happen here, so it probably happened in a lower time frame, and then the market pushed up, broke previous areas of resistance once, twice, came to retest, came up again. So it definitely returned it back to previous areas of higher highs. So once the market got here, it came back to retest the support, create enough momentum to do another push up to the top, to new areas of higher highs here. Okay. So once the market got here, I see a formation of the double bottom. Nope, that's a double top. So what the market did right here, it came up. So I think this is the first leg. It looks more like a 1, 2, 3, 4. Okay, that's the pattern. So it's a double top, and then a retest happened here. So it wasn't able to push it up further. It looked like it's turned into a double bottom, and the market just dropped through the support, and now it's going down to further levels of lower lows. Something happened here. Just consolidated for a little bit, and then once it broke here, the market pushed down. So 1 push, 2 push, and let's see what happens here. Okay, then the market consolidated, and we got that third push back down to new areas of lower lows. And this, I think this is the market. This is the lowest the market has ever been. Nope, it hasn't. So this is not the lowest the market has been. This is the area the lowest market has ever been, and the market look like it's headed back up. So it looked like it's tried to reach back into areas of lower lows, and then it's trying to head back up to previous areas higher highs. So what comes down must come up. What come up must come down. So when we got here, there's a pattern I see. I'm gonna circle it. So this pattern right here is the engulfing pattern. The bull candle, which is the green one, engulfed the red bearish candle. So once we see that and it closes out, it shows that the market may be going up. We also got the identification at the bottom of these two candles. We got some wicks that's sticking down. We got a long, I think that's a long wick right here. I can't really see. So we got a long wick poking down. So that just shows that the market is losing momentum. So that wick that's popping down there right there, that shows that the market came all the way down here. It tried to push further, but it wasn't able to close out. So the market went back up, closed out, lost momentum. The other candle formed, and the green candle formed above it and also closed out. So we got that push up back up to the top. So that's market structure. Next, we'll figure out the overall trend. I'm about to clear the screen, and we can clearly see that if we're at the bottom of lower lows, the market's trying to go up. So we can clearly see that we are in some type of uptrend near price action. Okay. Price action is the last active candle, or last candle right here, which is the red one. It's like a red doji. So all these are dojis. You got a red doji, a blue doji, a red doji. So basically the market is consolidating sideways. So we got to figure out what's going on in that area. So we do know that we are in an uptrend. So let's grab the bottom of that wick right here. Let's pull it all the way up to the top. So price is here, and we're looking forward to the next level. We're going to go up to the high highs. We're trying to reach up to here. So we're going to bring that over here. Okay. So now we're going to set our SR lines. The way we're going to do that is we're going to look for price action, which is the red candle. We're going to look over to the left to see what it's trying to break. It looks like it's trying to break this area here. Okay, this one looks it's going to take a little more time. So this here, and if it goes up, it'll probably head up to it's going to try to head up to this area here. And if price went down below our SR line, how far would it go? It's possible, look like about So I was gonna put it here, but I think I would set it here. This look a lot closer and look perfect. So it's right in there. Okay, let's go down to time frame. Let's tighten up let's add more SR lines between our within our SR lines we created. We'll be doing a top-down analysis. We are looking for we're looking to add peaks and inverted peaks on our SR lines. So we have a peak here. We have a inverted peak here. I'm gonna look over to the left to see if I can find anything else, something else. There's an inverted peak here. Some of these areas look like something's going on here. Yeah, it got respected. So I almost missed this area, but I wasn't 100% sure. So when I looked down the time frame, it definitely got respected. Definitely in these areas here. You know, there's not perfect touches, but it looks clean enough for me. Even like when price came up, it came right back down. So it's definitely getting respected. Not to a T, but it definitely looked clean. So I'm comfortable with it. And there's something going on down here. So I did see another area of probably an inverted peak, which would be here. So market pushed up, came back down, pushed up, came back down, pushed up again. I'm gonna check this gap here within the time frame to see if I see anything else. Okay, so that's it with the SR lines. I feel like something's missing within this big old gap, but probably not. I don't see it, but I like to get my SR lines down to a T. I really don't see anything, but I know something is going on in there because it's real wicky in here. So these wicks is popping out and it's coming back down. So it's something in there, but I don't see it. So if I don't see it, I'll leave it alone. Sometimes if I go down a lower time frame, I will pick it up. But for right now, it looks fine. I'll leave it. Oh, I found it. So it's right in front of our face. It looks like it's right here. So we missed this area. It could be right about here. Okay, now that looks a lot better. Okay, and there's probably one right here too. I just now seen this one. So let's grab this inverted peak. Alright, so I'll take that one. That one don't look too right. Okay, so we have created our SR lines from the earlier time frame. We do know that the market is consolidating in this area, so we're looking for the market to respect our trend line to go up. So let's grab our rectangle box. Let's look for price action, which is here. This area will be the lowest low area, and the market is trying to return somewhere up here to the highs. So let's pull our rectangle all the way down. And whatever's going to do in the market is going to form itself in here, and we'll be able to see a pattern on a lower time frame. Okay, for us to find a pattern, we are going to go to Google. We are going to type in Forex pattern cheat sheets. That's Forex pattern cheat sheets. And you guys are going to go to images, and you will review the images that's on Google to figure out the pattern that's going to form itself in the box. You don't have to memorize the name of the patterns, just memorize what you see, and then the market will become easy for you to have an idea what direction the market will go into and what may occur. Okay, from there, let's look into I would like to explain to you guys how we trade. We trade the retest and breakout method. So we wait for the breakout and then we trade the retest. So I'll explain. I think I said it backwards the first time. So here we go. So for example, if we know that we are in the uptrend and price is going up from here, we let price go up to our SR line. We do not take entry at our SR line. We wait for price to break our SR line to come back to our SR line, and then we'll look for entry once we see it on the way up and once we see that confirmation the market is going to go up, we take entry here. We take entry here, and we'll take it up to our TP here. Okay, so once again, we will not take entry here. We wait for price to break our SR line to return to our SR line. We look for entry. Once we take entry, we'll take it up to our next TP. Okay, so let's head back over to price action. Let's take a look at what's going on. So we know that whatever's going to happen in the market is going to form itself here. On an earlier time frame, we had identified that the market looked like it was in consolidation. As we went down a time frame, we can see that the market did go into consolidation. So we're looking for price to break out to respect our trend line and go up. I did do the trend line on an earlier time frame. So it's not respecting right now. All we got to do is tighten it up a little bit and just want to drag it over just like this. Okay, boom, still respected, same thing. Okay, from there we're gonna we're gonna go down the lower time frame, and we will see if we see some type of pattern. Bingo. So we didn't need all this rectangle space, but it was good to have an idea what we probably needed. But this is the main area we're gonna pay focus to. Okay, so we're looking for some type of pattern to identify itself in here. For example, the market could do something like this. So we know that the market is on the way up, and the market was at areas of higher highs. It came down. So the market came down from the previous areas of high highs. It got here. So now the market's trying to come up. So if you look at that last candle is not closed out fully yet. It won't close out until tomorrow at 5 p.m. So it can push up more, but for right now, looking like a doji. So the market can go up just like it did so far, come back down a little bit to retest our previous areas of support, and also respect our trend line, and we can get that full push up again, and that will be the formation of the double bottom. And then after that, the retest will happen somewhere, and they get a push up back to the top, the previous areas of higher highs. Okay, so if the market did do that double bottom or did some type of pattern, because it may not do a double bottom, this engulfing pattern could be enough for us to take entry and take it up for the ride. Right now we don't know, but this, as the market pushed down, what this is showing us is that the market was at high highs, it came to lower lows. So we see these bearish candles, and this bearish candle right here is a doji. So when we see this doji, the doji states that the market is indecisive. So when the market is indecisive, the markets don't know what it's going to do. So it just basically came down, it froze, it working way sideways. So either the market is going to end up dropping, going sideways, or picking up to go back up to previous areas of high highs. Okay, so right now we can see that price is being respected on our trend line and going up. So if we had to take some type of entry, if we did see entry from looking at our forex pattern cheat sheets, what we can do is we would head over to we'll grab our long position, and let's say we caught some type of pattern, so we can take entry here. We can take it to our next SR line. If we take it to our next SR line, it'll give us 19 pips. That may not be enough. If we take it out to our next SR line, it'll give us another 48. We're not too sure if price is going to break our rectangle. But before I do that, let me go back to the weekly time frame. Okay. So I want to go look at something, but that didn't help. So we can take price up to, so this is the lower lows, the next dip where it can take TP at, as you can look for price to come up here in this area. If it breaks this, it's probably going to go up to new areas, previous areas, higher highs. But for right now, let's take it to about our SR line. Let's take it for about 113 pips. If the market goes back and it hits our stop loss, how far can we pull back? So all I had to do with this, I could just pull it to our previous support line, and that would be enough. It didn't completely break. It can turn around or drop a wick and stop us out. If you want to extend it, you can. I think I would, because I've seen the market. For example, let me take a look at on the time frame what's going on here. 1, 2, 3. Okay, so let me identify what I see right here. So the market is going up. So what happened was the market came down. This that first leg, okay? This that second leg, this the third leg, this the fourth leg. And the retest happened with this red doji candle right here. And we know after the retest, the market will push up. So we got that push up again once, and the market came back down to retest. And then once the market retests, we can clearly see that the market's pushing up again. So after that, we got another push up to the top. Once this green candle area, this green body of this candle closes out on the 4-hour time frame, and it closes out above this blue bullish candle, we can take entry, and it'll possibly go up to the previous areas of higher highs. You guys can take it up to the level I told you to, or you can probably take it up to level, each his own. Okay. So let's take a look. Let's go back to the previous time frame, and we can take a look at the pips to see if the market did close out on that 4-hour time frame. We can be taking entry for the trade to take it up to previous areas, higher highs. Okay, so if we got an entry now, and it was a go for that 4-hour to close out on a time frame around 1 a.m. in the morning, that looks like a clear trade for us to take if it closed out above, and that will give us a total of 113 pips up for the target, which is the TP, take profit. And if the market goes back, we can take it back for a total of the stop loss could be 43 pips, which is an amazing move. 113 on the way up. If the market goes back on us, 43 pips for the low. That's an amazing trade for AUD USD. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention.